Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. mid-session brief. Typically on a Friday, we don't do much. Typically, we're sitting around going, this is no donation Friday. Put some money in your pocket. This has been an absolute light show on the markets today. It's huge. I'm getting messages from people all over the world right now. We're waiting for Trump to speak. And essentially what happened earlier today was the Supreme Court decided to strike down those tariffs. The tariffs that basically the Trump administration has built their foreign trade policy and their domestic policies on are going to go bye-bye. They're going to get rid of a good portion of these tariffs. It's going to happen very soon. And now we're starting to talk about refunds. What about the refunds? And I've got some things on not press secretary, but one of the honchos there, the economic advisors there to the president, Howard Lutnick, has some really ugly ties here. And I think that Lutnick's gone. Within 6 weeks, I think Lutnick's going to be out of there. That's going to bring a lot of uncertainty to the cabinet, and the way forward is very murky. Now, Trump is due to speak here any minute. I was going to cover it live. I'm not seeing a link. If somebody has a link, great, but I'm going to be real honest with you. I don't think it's worth watching. I don't think it's worth covering live. We know what Trump's going to say. He's going to come out and he's going to say, the Supreme Court didn't side with America today. We're bringing in a lot of money through tariffs. We were getting good trade deals and everything for the United States and the citizens. And what they're going to say, what he's going to claim is just it's absolute garbage. And listen, it could move the markets. There are some things that he can do to sort of say that, well, some of these tariffs are going to stay. There's all sorts of levers that can be pulled from the executive branch, but it will be a big one. It will absolutely be an absolute a big decision that happened today. This is one that's going to last for a while, and this is one that's going to start turning over some people from that Trump administration. I would be willing to bet that Lutnick's gone within a very short period of time, just because the public fallout between this and the Epstein files is going to make him go away. That's more than likely going to happen, and I would call that. I think he's finished by June. He's finished, but may even be sooner than that. As far as what can we expect out of the markets, I'm getting messages really from all over the place, coming a lot of them out of Europe, and they go, Shane, what is this going to mean for the markets? Are the U.S. stocks going to crash? What does this mean? Not necessarily. Now, there's a lot of folks that believe that those tariffs were a restrictor plate and they were holding economic growth back in the United States. A lot of folks are really looking at these markets saying, the sky's the limit. I actually had a great conversation with a trader earlier today that pointed out to me an incredible trend line that was developed on the US 30. This sums it up. This sums up what has happened in the Trump administration to U.S. stocks. Right here, you were sort of trading right around in here. You got Inauguration Day, huge crash, huge panic crash on these tariffs. Liberation Day, they called it last April. Huge market crash. And since then, it's just been all uphill. I mean, absolutely an incredible trend, incredible uptrend. I was pointing out, this is sort of the third touch of this weekly uptrend right there, from those tariff panic lows to this touch right here. I would call that a touch, very, very close. You don't have to. I guess you could say I didn't quite touch it. Pretty close. There was your nice pullback there that developed back in November, and then you really continued the rally into this year, which has been all-time highs, but a lot more compression than we've seen in quite some time. If I was going to pick a point of this chart out that reminds me of where we're at right now, you can see that 6 weeks of trade. Take a look at what happened right back in here. Sort of a real dirty, ugly situation last June when we were starting to make a shift in Fed policy and wondering a lot about what was going to happen. We also had a key level in play. It was right around 45,000. Well, now we're dealing with 50,000, and we've got some interesting market drivers coming our way for the rest of the year. If you came to me and you say, Shane, do you like the top side or the downside of this market? We know we're getting rate cuts this year. We know they're going to be aggressive. The Trump administration, after these tariffs go away, is going to need those rate cuts even more to try to promote some sort of domestic expansion, because without those protective tariffs on the board, all of a sudden that foreign investiture that's been coming in from all over the world, that stuff's going to slow down a little bit. They're going to say, well, why do I have to do business in America now? I mean, you can't do anything. You can't throw a tariff at us. You can't hurt our economy. Why should we build there? Why should we invest in new factories there? This is big because that was really Trump's big stick when it came to negotiations. The United States consumer economy is huge. I mean, it's very, very large, and it's the same leverage that China basically has. And the EU, to some respect, the EU has a lot of leverage there as well. Anytime you can take something offline, take a market offline to a vast majority of people or select nations, you've got leverage. And without tariffs, Trump's negotiation is going to be looking kind of weak now. He ain't going to be able to go in there and say what he usually says and get his way. So I think that the tariffs made war with Iran more likely. I can tell you that. I think that you're going to have to do something here to reestablish some sort of authority, and without the leverage to just apply tariffs unilaterally, the Trump administration lost a tremendous weapon that was being used to further his administration's goals, which was supposedly America first. Well, that's gone now. If you can't do the tariffs, you got a real problem. And so they're going to try to find ways around it, but the fallout from this is massive. I don't know exactly when he's talking. He's supposed to be on right now. So if you guys are watching it live, that's great. Personally, I think we already know what he's going to say. He's going to be very disappointed, upset. He says, well, we still have some things we can do, but they have been on the record saying this is the end of this is the end for the United States without the tariffs. I don't know. I genuinely don't know. I just know that it's been an active day on the markets. We've had a few great trade ideas that have panned out for us this week. Both of them around the New Zealand dollar. Great stuff. As far as what we're looking at, we're going to cover gold and silver today. I'm going to dive into the U.S. indices. I think we had a trade idea there that I put earlier today. That big pullback in the U.S. 30 could really happen. And we'll break down exactly how it could develop. So, Packard, I'm good to see you. Packard, welcome. Trump, please make us end the week on a rich note. Yeah, thank God it's Friday for Jason. TGIF, right on. Can't beat that. Let me see. All right, good to see you, Olin. Welcome over in the How to Trade community. Welcome back, everybody. Tuku, good to see you. Bobby Bob, welcome. Hi, Coach. No Donation Friday. That's exactly what it is. Steve Francis, hi, Shane. Was the American people not paying the tariffs anyway with the increased prices? Well, I mean, yeah, it's such a hard question, Steve, and you're not wrong. Inevitably, some of the tariff costs are passed through to the consumers. But what the Trump administration would argue is that the lower energy prices have offset that, and it's actually brought your consumer spending in the aggregate down. That's probably the argument I would buy into. But we saw from PCE this morning, this is very, very, very ugly. The inflation was up, GDP's down, and now you lost your tariffs. This is, I don't know that anyone can figure their way out of this rat's nest. Nobody knows. Nobody knows what's going to happen, including me. I also wanted to start off by saying today I got some great messages over in the How to Trade community today. Really great messages from Bobby. Bob sent me a really great message, and Tuku followed suit, and I got several other traders that sent me real positive stuff. And first of all, I want to say thank you. I'm really humbled. I'm humbled by the outpouring. It's really a fantastic thing to hear that you're having a positive effect on someone else's trading. And when I started back here 5 years ago doing this, these live streams, I really said, Shane, you've been around so long. You haven't been in the public eye ever. I worked behind the scenes as a writer and a trader, and nobody really ever saw me or heard from me aside from my writings. Even my name wasn't on my writings. It was all just ghostwritten. And a lot of what I decided to do when we went to these live streams and went in video, I said, you've been around a long time and you've learned a lot of hard lessons. And it goes back to 2011, even before that, getting really roughed up badly in the real estate industry and having to build back from zero. And I mean zero, actually losing assets, having to cut deals that were not in my best interest, but things that I had to do to survive. And I cut all those deals and I did everything that I had to do to keep going, to keep moving forward. And I said, Shane, you went as an adult from, age 30, what was I, 32? When I was flat. I went bankrupt. I lost the real estate market. They took everything from me. And being at zero, being able to build back and use trading and the markets and really applying myself in that area, aside from a couple of short stints in the oil field over there in the Dakotas, I know what it's like to build something from zero. And I feel like that's what a lot of you are dealing with. Now, a lot of you have great resources and means. I spoke with a trader yesterday that was out of the Middle East, and he was a bot trader, had his risk management dialed in perfectly, had some capital, had some resources, and was going to make a real go at this market. And I love to see that as well. And I always think back to in my mind, where was I when I was like 31, 32? I was in big trouble. And that's old to a lot of you in the room, but I was there, and I said, man, you got a college education, you've done things supposedly the right way, and we're still on the wrong end of the stick here. I've got to figure out a way to get in to build. And somehow we got there. We're getting there. I don't think I'm there yet, but we're getting there. And the lessons that were learned along the way, I said, you need to share as many of these as you can. And it's not about levels. It's not about showing you a trading strategy or showing you levels or really talking about psychology. I can tell you what the markets are from my point of view, and I can show you some of the beats out of my own playbook, some of the bad ones that I've taken and things to not do. Things like dollar cost averaging. When you're right, you're right. When you're wrong, you're really wrong. I'm not a fan. It's happened to me before. So it really meant a lot to get the outpouring today. So I do appreciate the messages, and I always enjoy being here. Even, I get heckled sometimes on YouTube. People, are critical. That's cool. Bring it all. Bring it all. Believe me, I've been around long enough in these markets, and I've done enough to where I feel like I can trade with anybody in the world. And all that confidence, all that swagger and confidence that it may not look like I have, but it's there. It was built over a long period of time, and it was built from bouncing back from setbacks. So if I can give any of that to you guys and get you started on maybe a foot saying, okay, here's what I can expect, here's what I can do. Just because I took a loss here doesn't make it the end of the world. Here's how we can move forward in a positive light. That's exactly what these streams are about. And if there's any way that I can answer questions that you may have along the way, that's what it's all about to me. So I do want to say thank you. And remember, the last thing about this little talk, psychology talk, is that when you succeed in the markets and you start reaching your goals, it is all you. You have done it. You have put the time in. You have put the work in. You have showed up every day. You've made the moves that you needed to make. You've managed your risk. You've boosted your education where you needed to. And most of all, you've placed the trades. You've taken the wins. You've taken the losses, and you've kept working. It's all you. Desire, drive, discipline. That stuff has to come from in here. And if you have that, you can win. That's about it. That's all I got to say about that. All right, let's go trading. That's for sure. Lebo, good to see you. Lebo, welcome. Andrea Garwal, Ralph H., always a pleasure. All right, let's go ahead and get right into a few things that we need to go over here. If you are looking for a strategy, be sure to check out our 9 EMA strategy. It's been a pretty good one for us. A lot of folks are really enjoying this. We have a strategy pack that's out online. Feel free to download that and give it a click. You'll open a zip file. It's got a PDF. It's got all sorts of stuff. I went over that yesterday in our tutorial, our MT5 tutorial. So I'm glad for everybody that joined us there. It was a lot of fun. It's always good to get something functional that you guys can use sort of on an ongoing basis. All right, that being said, let's go ahead and get a trade update going here. We had a support in view for the NZD USD. which was ahead of actually the Kiwis' big interest rate decision from the RBNZ earlier this week. So what we've got, really beautiful level down there, 51.51 was our entry, I think, somewhere right around there, 51.5, and you can see right here, really a fantastic zone. We've got that big P formation setting up that is very, very bullish. Boom, boom. Price is above 38%, something right in there, 51.50. So we're still like the top side of this market, even though it is under a little bit of pressure. So the Fibonacci's worked very well there. We'll go ahead and show you what happened on the short time frames. But right there, that spike low to that spike high, just dialed in beautifully. So how would we execute? Well, we had our entry point. That was our key level. Our next level, what were we looking for there? Like 35 pips. If we haven't already got it, we're right there, somewhere in that vicinity. So there was sort of your entry, really a nice hit right there, and then an immediate bounce up to about, 59.80. So you're about 30 pips there. Came back down to break even, milled around, and got another nice push today. And you can see your high up there was about 85. So you're right around, depending on your broker, you're right at 35 pips. If you wanted to hold it from here, you could. If you want to exit stage left, you could as well. I always recommend taking profits ahead of the weekend if at all possible. But that was a pretty good trade. This developed exactly like I wanted it to develop. Our timing was very nice. Very, very good. I'm very happy with the way the bidders stepped in repeatedly from that 59.5 level. Pretty good area. Pretty good area. So I'm pleased with how that went. That's for sure. Gordon Williams. Hello, Gordon. How are you? I'm doing very well. Thanks for joining us up today. But that was a pretty good trade there in that Kiwi. Now, as far as what we've got going for today, I put out a big time level on that US 30, and it's a big support zone. I'll draw it for you here in a minute, and it has to do with that monthly uptrend. That monthly uptrend is a big one. It's one that we have to really recognize where we've been and where we may be going. And the tariff thing has really impacted this uptrend dramatically. So you can see we already sort of talked about this weekly chart and this upward trajectory of this trend line. A couple of things that we need to point out here, and I'm going to sort of show you the idea, my rationale behind the trade idea. Right there was Liberation Day, April 2025, spike low, panic low. Everybody was concerned at that point that the markets may absolutely fall apart. Didn't really happen. Let's go right here to the monthly. So here we have it. There's the monthly chart. You're looking for that spike low right there, and then all the way to that all-time high. And sort of here's our pullback zone right in this. And this isn't exact, but it's right in this area. Sort of an interesting area to be targeting. You can see right in here, you've got some interesting stuff. You could probably also bring this right up to here and give you an opportunity maybe to get aggressive by a little bit more, I would say a greater chance of being active. So right there, 47.8. So we're looking at 48, somewhere in that zone. But what I really want to point out is this. We're getting ready to already roll to March's trade. It's the 20th of February today. We've got one more week left in February, and this low is going to be incredibly important. This month's low is going to be incredibly important. And if, in fact, we do trade and then test beneath that low, it's going to wash out a lot of retail longs that have just been moving their stop losses up and really catching this trend. It's been such an incredibly profitable trade, given the dynamic we have set before us. 2026 is an election year, potential war with Iran on the board. We've got a lot cooking that could send these markets south in a big way. So 47.8 more than likely will get tested if we break beneath February's low in March. I kind of think that could happen. Now, the other thing that I want to point out here is 50,000. Obviously, the key. We were calling for sells up there. It just didn't develop quite the way that we hoped. And, you find yourself hoping you've already lost. So I really wanted a different price action in front of 50. And what happened was it washed out all the retail scalps underneath 50 and then reversed. And now you've seen sort of a big sell-off from that 50,500 level. So I want to bid. I really do. I want to bid this market, but it's got to do something. It's got to move for me. And remember that trend line. It was a good observation. It's one that I missed. But the trend line, when you take a look at what exactly has developed here over the past, 52 weeks or maybe just a little bit longer, what happens with trend lines? We made a video a while back that was the trend line reversal strategy, basically a 3-touch. The idea is the third touch is everything. Well, there's one, there's your beginning, there's two right there. We're in the middle of this third touch. And what happens is typically is when we break beneath and get like a weekly close beneath that trend line, you're probably going to be looking to maybe head south. Now, for me, the trend lines, you can sort of debate where we should put it. Does it need to be right there? Does it need to be right there? My point is this. That type of thing could really impact you're trading, for me, I would just probably shoot it right up through there somewhere and look for a definitive close beneath the trend line before even thinking short. And you want a close that's way down the queue. It's like obvious. It's a big red candle. And that's typically one way that you can stay out of trouble with trying to trade trend line reversals. So if you do get a weekly close, and let's say it's down in here somewhere, then maybe we could start talking about that reversal really being on, and potentially maybe on the first week of March trading beneath February's low, which is right there, and then getting that downward extension. Our scalp probably will come into play at that juncture, but a lot of people are going to be questioning this market as we roll deeper into 2026. Big time action. Now, US 100 is a little bit different. US 100 right here is our monthly chart. You'll notice there has been some garbage in here that really has derailed what was probably one of the steepest rallies we've seen in stocks. Big time crash last April, and then there's your runner. There's your big time runner. Markets are just, every single month, 8%, 6.25%, 2.25%, 1%, 5.5%, 5%. Those are huge gains. And since then, we haven't done anything. Off 1%, down 0.75%, up 1%, sort of down 2.25%. So, but you're still very much in bullish territory. There's absolutely no question about that. Tech's different. Tech's different because we're fighting with AI. We're fighting about the future of AI. Are there enough chips for the AI? Is there enough energy for the AI? AI supposedly is pulling the train for the entire NASDAQ. Now, I don't really believe that to a complete extent, but there's no question about it that the AI boom has taken the NASDAQ to new heights over the past year. There's no question. Is the AI boom over? What are these tariffs going to do to AI? If all of a sudden I can't put tariffs on China to maybe make chips or import things cheaper here, what is that going to do to the AI industry? Were the tariffs in a place where they were actually holding the NASDAQ back? Is the NASDAQ going to explode? Or are we going to see some other forms of protectionism? I have no idea. I don't think anybody does. But I do know this. Our technicals are strong. This is definitely a P formation, nice big rally, sort of flatlining trading right around 25,000. We've pointed out that level on too many occasions. I put you guys to sleep for months talking about 25,000, but there it is. There's no denying that 25,000 is huge. So if we get a big correction, of course we're bidders down here. Right this minute, do I think it's going to happen? Something really serious is going to have to happen to send the US 100 down to that 22.5 level. But if it happens, we'll be there. We'll be there. Could it happen? Yeah, it's very possible. It's very possible. This compression right in here for about the last 3 months, you could call it whatever you want to call it. Is it a pennant? It's almost a bullish pennant. If you want to take a look at it, boom. There's your rally. Okay, if you want to draw the pennant, we certainly could put the triangle in. I'm not a very good artist, but we can do it. Maybe something like that. It's not the prettiest pennant in the world. Maybe it's more of a flag. Maybe we say it's a flag. The bottom line is this. The bullish trend is in effect. No question about it. The bullish trend is in effect. But it feels to me like we're either going to change directions completely from 25,000 or we're going to catch our second wind and move much, much higher. If that's the case, you're going to need some rate cuts, and it's going to be fascinating to watch how these tariffs play out. It really is. That's for sure. All right, everybody, let's see. I got a few things there, and we've got a lot more to cover. So it's very cold today. It's warmed up to about 20 degrees Fahrenheit, but it was below 0 Fahrenheit just a few hours ago. I'm about a mile high above sea level, so there is no moisture in the air at all. All right, let's see. Lebo, being a trader is easy. Being a profitable trader is easy. Being a consistently profitable trader that takes time, effort, and discipline. Not many of us reach that level of consistent profits. It's a legitimate point. Everybody wins trades. It's not hard to sit down and make money in the markets. You can just throw some trades down and they go in your favor and you make money. Keeping that money is a little more difficult, and making sure that you have a margin built in over time is sort of the holy grail. And I dove into the coding yesterday on the 9 EMA. If you missed that workshop, check it out on over at Switch Markets. And I showed you some different things that I'm doing with the 9 EMA and the ebbs and the flows in the way that profitability looks over time. And I did more in-depth studies, and I see that the coding needs to be adjusted. So maybe if I have time, we'll get to that at some point and maybe get a better product there. But the biggest thing that I was realizing is I have all this data at my fingertips now. And You could go back, and I was running the 9 EMA on a daily chart all the way back to 2002. Realistically, 25 years of data. And I was adjusting the risk versus rewards, and I was looking at all sorts of different tendencies. And over time, I mean, it was a winning strategy over time. There was no question about it. But as you get into the granularity of these reports and you look at the ups and the downs are significant over a 25-year period. So when we're traders, I always tell you to be even keel. And it plays right into Lebo's point. Being a trader is easy. Being a profitable trader is easy. Being a consistently profitable trader takes time, effort, and discipline. And the discipline end of it is being even keel. It's not getting too high and it's not getting too low. It means that your winners, maybe those aren't as spectacular as they could be, but your losers aren't as bad as they can be. You're sort of playing the game right in the middle. I really recommend taking that approach. If you do that, you take your limited risks, you look to build over time, and you don't really try to hit those big lottery plays, those roulette wheel plays, where a big win can be just as destructive as a big loss, and nobody believes that. Nobody believes that. One of my first mentors that I had was over at one of the biggest prop firms around now, futures prop firm. And he was telling me one time, you don't get very much time talking to these folks, but I got to talk to him, and he told me, he said, listen, when I had a big winning day, he was an old pit trader. When I had a big winning day, I took the next day off. In my mind, I'm like, wow, why? I mean, you're thinking, oh, okay, you had a big day, you're seeing it well, you're trading well. He said, I would take the next day off. And I was like, really, why? I'm thinking, why? And he said, some of my worst losses were right after I had my biggest wins. So believe it or not, when you're doing the peak and valley profitability thing, where you're up huge one day and down huge one day and then up huge and then down huge, eventually what happens is you get tired and worn down, and that chart goes from down huge to down huge to down huge. I want everybody operating right in the center. I want you consistent profitability, grow it over time. And that's why I really stress things like one-to-one risk versus rewards and tick scalping. People, I talked with a trader yesterday that was an automated trader, wanted to get into that. And I told him, he said, what do you do? And I go, I'm a tick scalper, essentially. And the idea is like, well, there's not much money in that. And I was like, well, you can put on a lot of leverage, and a few ticks could pay you a lot of money. And that's sort of the way that I've gone over the years. My bets are a little bit larger out of the gates because I know that I got a pretty good probability of winning, and I also know that I can cut my losses fast. When you start getting into those bigger risk versus rewards, and the numbers bear it out, I mean, I looked at them, it was 1 to 4, 1 to 5 on that 9 EMA daily chart. You could see your profitability went way up and then down and then way up and then down and then down and then back. And the swings were huge. I'm not interested in swings. I'm interested in getting in, making my money, and getting out. And we do that every day. We make money every day. That's the concept. That's sort of what I do. Now, you don't have to do what I do. You can do what you do. Just remember, those peaks and valleys, those swings. Wow, I was up 50,000. Man, now I'm down 50,000. Okay, now I'm back to even. Even though you fought back to being even, that swing will take its toll on you over time. So I've always say stay even keel. Take all the trades you need to take. Make a few good trades. You're a great trader. Consistency. Consistency is what it's all about. All right, let's take a look at this one. This is interesting to me. I got to point this out. 75 area in play for the silver market. So right there, you're looking at a daily silver chart, and you've got that 920 EMA crossover developing. This is fascinating to me. Now, right now, we're printing about $82, which is up 5% on the day. Probably the tariffs really helped. We haven't even talked about the news events that were out, but those were big ones as well. This bump in silver is significant. You're back up above 80. All right, I would say that's a significant move from 75. If you get a daily close, you're printing 82 and a quarter. Probably pretty good. I'm watching this closely. This daily 920 EMA crossover, even though it would be probably too expensive for most of us to play unless you just had tiny, tiny leverage, which could make it a good trade. This may actually develop into a bid signal sooner rather than later, maybe in the next day or two. I'm interested in this. This is fascinating to me. Let's take this down to a 4-hour chart, which is also a pretty good time frame to be trading metals. And there you can see it. Right there. There was your buy signal. Your buy signal came across the board the 18th of February, so about a day and a half ago in the evening time, something like that. Fantastic play. Your bid was from 78. You're printing 82. I mean, that's a beautiful move. The thing that I really like about this, and it's something that I'm going to be looking at for the 9 EMA, what about our stop loss? Long term, maybe it's profitable to have it right beneath the signal bar. Maybe that's better. Maybe that's superior for long-term profitability. Just cut those losers off quick and then move on. Don't worry about getting chopped out. It's an interesting question. It really is. I'm fascinated by it. I think that we can optimize things a lot better on the strategies that we've executed. And that's sort of what Q1's all about for me. 2026, figuring out a few ways that we can look at things that maybe make life a little better. But this 920 strategy, especially when you step back to longer time frames, it can be an absolutely lethal swing trading approach. That's a pretty good trade right there that developed on that 4 hour. Love the 4 hour for metals. 4 hour charts, pretty good for metals. 24 hour commodities. Everybody in the world's trading gold and silver. Not a bad way to be approaching the market. Same with Forex. The 4 hour chart on the Forex is pretty good as well. Around the clock. I don't have a problem with that. The shorter time frames, the 5 minutes, the 1 minutes, the 15s, the 30s, you're probably better off focusing on those really high impact periods of where the participation's in the market. Typically that's going to be your London US sessions, London US overlap, something like that. Maybe around the Tokyo Open, trading the yen and the Nikkei. Definitely is worth looking at as well. Something to think about there. Joshua, good to see you, Joshua. Welcome. Good morning, good evening, good afternoon, wherever you may be. I'm confident this stream's finding you well. All right, so we've got some interesting stuff right there happening in silver. Now, we've got to cover gold. I don't want to put the gold on the 920 just yet. I want to take a macro view of what's happening in gold. A lot of you have reached out to me about the gold market in the last several weeks, and I've had the opportunity to trade messages with a lot and actually do a couple of interviews with people that are trading gold, and they're serious about it. For me, the game is relatively straightforward. I haven't traded gold really going back to, I got off it, stopped trading it right there in late January because you can see these daily ranges. Take a look at our ADR. I mean, I know I don't talk about the ADR much. This is average daily range, 13 period. Take a look at this ADR. These ADRs are very small. What's an ADR? Average daily range. That means the distance between the highs and the lows. Look at this daily range. Now, back in November, it was easy. We were just playing rotation the entire way, right? Then the game started to change. Business started picking up. This right in here, these average daily ranges are staggering. Now you say, what? Those have dried way up. Yeah, but you're still working on your 13-period average. So it hasn't gone down to normal yet. This down in here is normal. This is what I want to see return to the gold market before I get in there and start going hard. Now, the reason why this is coming down fast is because you have seen an unbelievable amount of volatility and liquidity in these gold markets. And the peak of it, realistically, was right in here, starting last January and then early February. And we are still trading inside of the first 3 days of February. So I get so many questions. Gold, gold, gold. What about gold, gold, gold? And I think if you're a gold trader, that's great. Watch your risk. Use your risk management. Your lot sizing needs to be good because these ranges are huge. They really are. Even though these ranges in here look very small in comparison to these, they're still epic. Those are epic ranges. So I find this market to be just a little too wild for even my tastes, and I'm a crude oil trader. So, but this gold market has just been frenetic. So when I look at this and I go, okay, do I need to be trading this? The first thing I think of, no. I need to wait for this thing to stabilize, and I'll know that when my ADR goes back down to a normal range, maybe right around 100. That would be fun. That would be fantastic with me. Right now, what we're reading right up around 300, and now we're down about 160, so we're almost there. A trading idea or a trading strategy for this type of environment. Very difficult. Number one, I would always know where 5,000 is. It's sort of like playing quarterback in the NFL. Always know where the free safety is. Don't let the free safety intercept your passes. Always know where 5,000 is for gold. So right now we're printing 5,058. All right, so do we have an opportunity maybe to rotate back down to 5,000? I would say, yeah, that's a probable thing over the next several days, but we don't know. And there's so much going on going into this weekend. To take a position home in gold or silver over the weekend, I can't stress to you how dangerous that is and how you could wake up Monday morning owing your broker a lot of money, and it wouldn't even be your fault. So be very careful doing anything. I recommend going home flat gold and silver right now because these things are all over the board. All right, that was my disclaimer. That being said, let's take this right down to a 4-hour chart and see what's happened. All right, they already beat me to it. Right there, sort of there was your break, and then going into sort of a big news bar here. What happened? You came back down, you hit 5,000, and you bounced. Probably start thinking about 5,000 as being potential support. This would be a trade that I would consider for Monday. I would consider it. I'm not saying that we're marrying it, and we're not going to bet a fortune on it, but something like this, yeah. Ideally, you would love to see gold push a little bit higher, maybe on today's upper extreme, and then we get a Monday open and a pullback, maybe a pullback bid from right around 5,000. I mean, that's probably something you could sink your teeth into for Monday, but it's a scalp. You know, you're looking to grab a few dollars on that trade. You're not really looking to take a position because people are getting absolutely destroyed taking positions from 5,000. I mean, right here, okay, we're long from 5,000. Okay, we're short from 5,000. Okay, we're long from 5,000. We're short. That's what we call a picket fence. That type of whipsaw action will destroy you. It will destroy traders. It happens every single day. Don't let it get you. Let the market break a little bit and then come back. That's essentially what my trading's all about. We let it break, and then it comes back, and then we do business after I know pretty much what the tendencies are. Right now, the market feels like it's breaking to the bull. I'm not going to sit around and say that a 1.5% move is nothing because it's a good move, but we haven't left, Elvis hasn't left the building yet. We're still in that vicinity of 5,000, so that to me is everything. Look, right now we're pushing higher, perfect world wish list type of stuff. We'd get a high right up in there, maybe 5,100. You can see right there that swing high back on the February 11th. This area, a lot of people are going to be selling from there. Maybe that's today's top, somewhere in there, and then we get that early week pullback to 5,000, 5,005, something like that. That could be very good. That could really be good for us. But for right this minute, trading gold, if you're scalping it intraday, that's one thing. If you're trying to take positions on this, I would avoid that. I really would. 30-minute chart, what do you have? There's your pullback right there, 10 a.m. Eastern, about, a half hour after that New York open. So right there, big pullback. That was when the tariff decision was announced. This is a crazy candle, comes down, and now what? Since then, we bounced off of that 5,000 level, and we're moving higher. Fascinating stuff. I mean, really fascinating stuff. You might get a 5,000 bid later today. Who knows? The way this market's working, it's just wide open. It's crazy. The restrictor plates are off. The action is there. Just because I'm curious. Very bullish. Didn't even come back. Didn't even come close to challenging that 38% down there right around 5,043. Interesting stuff there. Very interesting. All right, this week was an interesting one. We had a lot going on. It was a pretty good week for me. I feel good about the trades this week. A little bit slower than I would have liked. Yesterday, really slow for EIA crude oil. The 9 million barrel draw on supply was huge. I posted that over on my X account, so you can check out all that stuff over there, Shane V_trader on X. But the Friday today was all about core PCE, US GDP, and new home sales. I don't even think we're going to cover new home sales. I really don't. There was so much data out today. Let's just get right into it. This was the news of the day, and this is about half of the list. Core PCE price index came in at 0.4% month over month. That hurts. That's a significant rise in inflation. That beat expectations of 0.3%, and it also beat the previous release of 0.2%. So remember, core PCE is going to factor out those things, those more volatile categories, specifically energy. So when you're factoring out energy for your winter months, it's not a bad thing to be looking at core PCE. That's what most of the markets do. For me, that's an uptick in inflation. That is going to really, I just don't think the Feds are going to cut interest rates. Not until Jay Powell's gone. I just don't believe that. GDP quarter over quarter for Q4, 1.4%. Horrible number. Absolutely horrible print. Horrible number. No two ways about it. 4.4% we had in Q3. We were expecting 2.8. We got half of that, 1.4. Really a bad look. Really a bad look. So now you've got PCE ticking higher, GDP ticking lower. Sort of a miserable end to 2025. 2026, is it any better? Theoretically, the tariffs being struck down could spark GDP. Could bring, it's like taking the restrictor plates off of businesses. You could see some short-term growth. I won't swear to that because we don't know what's going to happen. But we do know from a financial standpoint, those tariffs they were a big deal to a lot of different industries. Maybe GDP rebounds and goes back up. It's really hard to say. I don't know. Core PCE price index year over year for December, 3.0% over 2.9 and 2.8. That's really an ugly number. That's really an ugly number because you had a first full year of the Trump administration's policies. Core PCE goes up year over year over Biden's last print. That's not good. That is not good news, believe me. So there's a lot of concern about this set of economic numbers. The big thing that I wanted to point out, I sort of wrote this up in the trade idea, was personal income. I'm not worried about that, even though it did fall. We're not going to worry too much about that. That's really difficult to figure. Real personal consumption, consumer spending right there, 2.4% down from 3.5%. Remember, the way that recessions begin, spending comes down. Consumer confidence comes down. Because consumer confidence comes down, the consumer doesn't spend as much. Then what happens? The consumption of a consumer-based economy, the economy shrinks. And when the economy begins to shrink, that's where you start to see maybe your GDP starts falling. Maybe you wind up in a recession. If we go into a recession this year in the United States, the globe goes into a recession, it'll be all over in the midterms politically. And we're going to talk more and more about this stuff because it all plays into where the markets are going. And that's really what we care about. We are in an incredibly uncertain time right now. No question about it. No question about it. GDP sales, GDP prices. I'm not really interested in any of that. The key is that inflation's up and GDP's down, and that's not a good look. The core PCE price index, which is the Fed's preferred gauge of the underlying inflation in the U.S. economy, rose by 0.4% from the previous month in December of 2025. The rise has surpassed market expectations and increased to reflect the sharpest increase since last February. This is in line with the FOMC's warning that the disinflation process is slower than previously expected, if it's happening at all. Ugly situation. What does this mean? You can see the big jump. We came in flat, boom. Big jump in December. And this also comes from a perspective of all of our government data was delayed last fall. So I have major questions about whether any of those previous releases are remotely accurate. And that includes Q3 GDP. I just don't believe them. And the reason why is not necessarily that somebody's in there cooking the books. We know that was the case from about 2012 to 2017. The books were cooked. We knew they were cooked. It was just sort of a joke. I don't know that they're cooking the books overtly, but I do know that they're the new folks in the BLS, Bureau of Labor Statistics, that are calculating these numbers. They're brand new. Everybody got fired last fall. Remember that. So you got a new crew in there. You also had the government shutdowns, which made the availability of data tenuous at best. So what were we really talking about? We were talking about somebody pulling numbers out of the air. And now you're starting to see what the real numbers may be. And if that one point, here's the deal, that Q4 GDP, that's a preliminary number. If that thing's too high, let's say it comes in and they revise it down later this month or in March, man, look out. Absolutely look out. So it's absolutely huge that we understand the economics of the situation are very uncertain, very, very uncertain. We got a couple questions here, and then we'll go through exactly what we can expect over the weekend in a few markets. If there's any things that you guys would like to look at, we'll check in with our 9 EMA as well. But if there's any Forex pairs or any specific items that you'd like to look at, let me know. Let me see. Lebo, would you recommend someone to trade multiple pairs or focus on 1 or 2 pairs only? I only trade gold in the US 30. You got a pretty good mix there. And my apologies for not being able to pronounce your name, Lebo Gang. Grad, I'm going to call you Lebo. No offense. When you're trading a market, all right, what you need to do is, if you're going to trade multiple markets especially, but if you're going to trade a market, you need to find one that has good volatility that can actually give you the moves you need to make a living or make consistent money in. You've got 2 good ones there. This doesn't get much more volatile than gold right now. And the US 30 has been very slow, but still a very nice market to target. There's a lot of volatility in that day to day. So that's good. The other thing that I would recommend is when you're going to open up and start trading 4, 5, and 6 markets. Gentleman I spoke with yesterday was going to target 6 markets. And I said, that's great. Go for it. I always recommend finding markets that are not 100% correlated. And there really is no such thing as 100% correlation. But what I mean is this, is you don't want to be trading, 4 or 5 markets that are all moving according to the same thing. So for instance, you wouldn't want to sit there and just trade all the Forex majors. You wouldn't want to do that. You'd want to say, well, okay, I'm trading the US dollar against everything else. Well, you're going to go as the US dollar goes. Realistically, that's what's going to happen. Now, some majors are more active than others on certain days. You see something like the dollar CAD and maybe, the Aussie. Those are commodities. So when the commodities are rocking, those are typically volatile. You see things like the Great Britain pound and euro are more dependent on Eurozone performance and the Bank of England and also the ECB, the European Central Bank. Those things are definitely going to move different than, say, your commodity dollars. Okay, that's fine. But like, let's say you were going to sit there and trade 5 markets and you said, okay, I'm going to trade the US 30, the S&P 500, the NASDAQ 100, and the Russell 2000. So you're going to trade all the US equities indices. I'm not saying that it can't be done profitably. It probably can be. But those, most of the time, you look at one of them and they're all sort of up. You look at the other, if they're down, they're all sort of down. Some days are mixed. I'm not going to, that's fine. But is there enough divergence in their performance to really give you an edge? What I'm saying is there a reason to trade all 3? Or do you just want to focus on or all 4? Do you want to just focus on 1 or 2, maybe 2? It's a great question. So here's what I would recommend, Lebo. I would start off with a market that you really are good at and you really love, that you understand top to bottom. For me, it's WTI crude. That is always in the mix. I'm always trading crude oil. That's always on the screen. That's always in the mix. I'm looking at it right now, $66.53. I've got some sells up above $67. It could be very good. I don't know that we'll get them today. I doubt it, but maybe. So I know that. So I've got a bunch of trades that I want to execute on crude oil every single day. So that's my base. And then I'm going out looking for other things that move differently. Gold moves differently. Even though they're both commodities, gold has a mind of its own. It's a great thing to trade. Just a little bit too big for me right now. So I always have gold in the mix typically. And then I'm looking for currencies. Euro FX futures. That one's been pretty good over the past year or so. Euro FX has been pretty good. And I'm pretty happy with that. So that right there would give me 3 at an index. That's 4. Is that too much? It can be too much. It can be too much to try to manage each one of those markets profitably, as opposed to just focusing on maybe one and upping your leverage and being successful every day. What I'm saying is if you're trading 6 pairs or 6 markets or 6 different instruments and consistently you've got 1 that you're always winning on or 2 that you're always winning on, I would focus on your best markets first and then try to diversify out from there just to get more trading opportunities. But don't just believe that you have to jump in and trade the entire board and do too much. You don't need to do that. You really don't need to do that. Focus on 1 or 2 to begin with, branch out to 4 to 6, and then as you get to be a veteran, I'm confident I can trade anything on that board. Is it worth it to do that, though? Well, you only have X amount of money, X amount of margin. So what you end up doing, and I've done it, I've traded 5, 6 at a time, had all of 4 screens. Now I went down to 2 screens, but I've done it. And what happens is your money gets strung out. So I've got a great trade coming up in WTI crude, but can I put it down because I'm tied up over here in gold, the euro, and copper? Makes it tough. Well, I can't make this trade as big as I want to make it. Well, where's the point of diminishing returns? For me, I've always traded best when I'm focusing on 2 to 3 markets at a time. But I feel comfortable being able to go where the action is. Like, I haven't really been trading the indices. I haven't really seen the reason for it. Now we're starting to settle down, though, and there's some great trading going on in the indices. Dollar's going to be pretty good this year. We're already starting to see some volatility in the dollar. That's going to be great. But for me, bread and butter's, I know my bread and butter. I know what I need to have in the queue every single day. So it's a tough question, Lebo. I hope that helped a little bit. Let me see, Ralph H. Hey, Shane. Hey, Ralph. With all the economics reports out there, which do you focus on that'll move the markets? Great question, Ralph. There's a few that you need to know. U.S. non-farm payrolls moves the markets. NFP, always know when that's going to happen. CPI, U.S. CPI, Consumer Price Index, know when that is. Anytime a central bank acts. U.S. Federal Reserve announcements, Bank of Australia announcements, Bank of Japan announcements, Bank of all the banks, Bank of England, ECB, Bank of Canada. Anytime the bankers talk, the markets move. Now, typically, it's not like you can come out and make some comments and then the market's going to move. We're looking for official Fed announcements, official central banking announcements. So you take those. Now, as far as the other things out there, EU puts out a CPI. The Bank of England, BOE, they put out a CPI. There's inflation numbers that come from all over the globe. Those will move the markets, but it will be regional. So as far as the huge events that you really need to know can shake things up, those are going to be your U.S. events. Those are going to be the ones that originate here in the United States. CPI, NFP, Fed announcements. Those are big ones. Those are the ones that impact everything. But the central banking announcements, definitely know when those are happening. If you're trading the Kiwi, you better know when the RBNZ is giving their interest rate decisions. Good question. Really a good question. And it's become a lot harder, Ralph, than it used to be. That we never, under the Biden administration, I mean, I remember that last summer that Biden was in office, so it would have been the summer of 2024. I remember U.S. equities were so dead. They were so dead that you just traded ranges every single day on the E-mini S&P 500. You just showed up on the futures contract. You just showed up. You waited for a range to get established. You traded the range the rest of the day. It was great. It was boring, but it was fun. It was easy. And now the news, Trump speaks and everything just goes crazy. I mean, take a look at your Dow 30 right now. Let's take a look at exactly what's happening here. US 30. Okay, we got all of our long-term analytics. Cool. Let's go down to a 30-minute chart. Look at this nonsense. There's our trend line blowing right through price action. But take a good look at what we have here. What has happened today? That's what we call a barcode. That right there is what we call a barcode. It's like one of those, like a barcode, how you identify products. Boom, boom, just absolute chaos. Look at there. Spike low there, right? US Open, ding, ding. You had some PCE action, a little bit of bump in volume here. Okay, US Open, bang. Then you get your tariff decision. Okay, sold off of those tops, then back down. And now it's just trench warfare, and it's an absolute fight in here to figure out what's going to happen. And now you're starting to see the market move higher. My guess is Trump just said something, if I had to guess. Let's take this down to a five-minute chart. There it is. So my guess is right here, maybe, 15 minutes ago, Trump took the stage and started talking? That would be my guess. Let me check the news. What did he say? There it is, right there. And this is life, Ralph. This is life as a trader now. This just broke. Right there. So 11:41 Eastern, so 6 minutes ago. Trump announces new 10% global tariff after raging over Supreme Court loss. We knew that he was going to do something. There was no question about that. And now what he's saying, a 10% global tariff. President Trump said Friday he will sign an executive order imposing a new 10% global tariff hours after the Supreme Court struck down his sweeping reciprocal import duties as a major rebuke of his trade agenda. Breaking news, a 10% tariff.
Yeah, the absolute right to do. And that's taking place. That's a lot of money coming into our country. And then during that period of about 5 months, we are doing the various investigations necessary to put fair tariffs or tariffs, period, on other countries. So we're doing that period, but we're immediately instituting the 10% provision, which we're allowed to do. And in the end, I think we'll take in more money than we've taken in before.
Mr. President, you've used the tariff revenue to pay for a host of federal policies. You claim that they will pay for them. What happens to
like the farmers. We took care of farmers. You know, the farmers were mistreated by foreign countries very badly, very, very badly. And last week I gave them $12 billion out of tariff money. We intend to, out of tariff money, because just so you understand, we have tariffs. We just have them in a different way. And now they've been confirmed by the Supreme Court of the United States. So there's no longer that question out there about tariffs. And we'll be taking in hundreds of billions of dollars. And countries that have treated us badly will have to pay a price for treating us badly. And countries that have been good to us will be treated very well. We just left the top person in a place called Vietnam. Just left my office. Great gentleman.
All right, then we get on to the stories. Then we get on to the Trump stories. So what's happening right here? They announced the 10% tariffs. You can see that Trump's frustrated, and this was definitely a plan B. But there was the big rally. So there was the big 5-minute rally. We went from right around 49.3 up about 250 points. So right there, right in here is when that news dropped, and there was your rally. So the trend line's that's phenomenal. We probably should have just been shorting that trend line, but you can see exactly what we're talking about, how volatile it is. So a great question, Ralph, timely question. What do I focus on? When Trump's out there and he makes a statement like that, probably going to move the markets. The problem is that most of it just turns into storytelling. That's why we turned it off, because he's going to talk forever about the story behind whatever deal that they just cut today, and the deals are always fantastic, and we all know that. So the markets don't necessarily move over that. Interesting stuff, though. That's for sure. Let's see. What else do we have here? I got another question. Lebo, I used to trade U.S. oil, but for some reason I keep missing the big spikes in oil. I used to trade it, and even though I made profits, I didn't like the way it moves, so I abandoned it. Yeah, I mean, to each his own. You don't have to trade anything you don't want. That's for sure. You don't have to trade anything that you don't want, and that could be probably the lesson for today. Let's take a look at silver. Silver exploding, 82 3/4. Pretty good move right there on that 920 EMA crossover. Let's go to gold. Gold right there, same basic signal. Let's take this to a daily on gold. Much different. You're not going to get the crossover. Not going to get the crossover, but this right here, we could get the crossover from silver. That'll be fantastic. All right, let's take a quick look at our 9 EMA strategy here and see what we have going on. You can see right there is our US 30. US 30-minute chart, very, very tight. RSI is right there in the territory where you really don't want to do much of anything. 5-minute chart, though, sort of a rally. Not too bad. You caught a pretty nice move right there earlier today. Got the sell-off, but just chaos. 1-minute chart. Did we get anything going on the 1 minute? Not really. Right there. If you got a bearish close, you could probably sell it. You might get the setup right here, actually. How many seconds do we got? It's got to go beneath that 9 EMA. Yeah, that essentially would be the trade. I'd find that very dangerous right now, though. So pretty interesting stuff. Euro USD 30-minute was pretty good trading earlier today. Saw really some nice volatility, a great opportunity maybe to bid down there. Nice bid scalps. I had one of those trades earlier. Let's go to maybe a 5-minute chart. 5-minute chart, yeah, just sort of flatlining, though. Really tight today, really tight. 15-minute, not really much there. Dollar yen 30-minute chart. Interesting stuff. Just sort of been bouncing back and forth. Always tough when the market doesn't move. 1-minute chart, potentially, yeah. I mean, 1 minute, there was your bid right there. Dollar yen, nice, beautiful move. I'm interested to see the back-tested results for the dollar yen. I think with the 9 EMA, it will perform better than that Great Britain pound USD that we were looking at yesterday. All right, everybody, I've sort of gone on long enough. There's a couple other news items, though, that I would be remiss if I don't mention. We sort of already talked about the sweeping global tariffs and the impact that that's had on the markets. That's developing as we speak. The other one's Iran. Nobody's really talking about Iran today because of the Supreme Court, but this has been front and center with the U.S. military buildup in the region, and you can see that the odds of the U.S. striking Iran this weekend, not very good, somewhere right around, 11%. So I wouldn't think that that's going to be the case, but maybe in the coming weeks. Supposedly Iran has two weeks to figure out their future with regards to their nuclear program, and then strikes are sort of becoming anticipated by the end of March. So we're in for some volatility there. This is the part about the tariffs that are I wanted to mention today before we sign off, because there's a lot going on right now. Epstein files, tariffs. This tariff action with specifically Lutnick is going to be a conflict of interest in a big way. You can see right here, Commerce Secretary in promoting tariffs, Lutnick's former firm, Cantor Fitzgerald, which is run by his sons, reportedly created a product allowing investors to bet that Trump's administration's tariffs would be struck down in court. So what Cantor Fitzgerald was, I believe they ran binary options back in the day. I had an account with them, and I was trading binaries. I don't trade binaries anymore. I like pure price action. But this conflict of interest is very huge. And apparently this firm, Cantor Fitzgerald, is in position potentially to make hundreds of millions, if not billions of dollars on these tariffs being reversed. So this is a conflict of interest. This type of thing is not going anywhere for Mr. Lutnick. And the last thing I would say is they've already called for his resignation for relationships to Epstein and actually admitting that he was on the island with family. Doesn't matter why you were there. The public not really digging it. So I think you're going to see a shakeup with Lutnick here, and it's coming. It's coming relatively soon, probably in the next 45 to 60 days. I think that Lutnick's going to step down. And, he's a billionaire already. So a lot of heat around there. There's going to be some changes coming to this administration. This tariff thing did not really do anybody any good, that's for sure. Now you have 10% global tariffs. There's going to be a lot of talk about what this could mean to the future of economics. So I'm definitely interested to see what happens. All right, everybody. Well, it's been a fantastic trading session. I want to thank you for joining me. I want to thank everybody for the kind words today, and thank you for the questions. Really fantastic day to be trading. Typically, we're on a no donation Friday. Not today. Not today. Today there was a lot going on. So I'm going to go back and see if we can catch maybe a crude oil trade towards the end of the session. Remember, if you're taking home anything, silver, gold, shares, whatever, anything you hold over the weekend is going to be very, very, very risky. Very risky. So be careful with what you do. And remember, when you take those positions home, even though you have the margin money to cover your initial position, if that thing opens way out of the money for you, you're going to be liable for those margins. And you're going to be liable for the loss that's attributed to your position. So if you're holding positions, just be forewarned that it's incredibly volatile out there. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.